Alright guys, Gen Z Ricer here, and today we got a small portfolio update video, and we're also going to update you guys that I will be making a margin safety video soon. I don't know when, but it's going to be soon, guys. I feel like as a content creator, even if you have 1 viewer or 100 viewers, you should have an obligation, especially if you're in margin, to make a video about, the safeties of margin. It doesn't matter how many times that you're going to say, don't follow what I'm doing, this is my journey, because at the end of the day, someone is going to follow you, and you should have a moral obligation to do something like that. So yeah, we're gonna make a margin safety video soon. Looking at the portfolio, $114,000 in margin buying power, $132,000 in value. We can look down and we are low risk, $74,000 or 55% margin buffer. I'm never gonna say I got a big buffer because I don't want to be complacent and jinx myself. So essentially we got a decent buffer, let's say that. We are currently 34% leverage, and how I get that number is $132,000 in equity plus $68,000 in margin gives us a portfolio value of $200,000. 68 divided by 200 will give us 34%. So yeah, 34% leverage currently in margin. It's a big difference from the previous 85 to 90% margin, usage, but it is what it is. We deleveraged, we learned some lessons, took some losses, and we're gonna come back even stronger now. So yeah, you can look up here. We're dabbling in options now, and I've always said that I want to learn to do options eventually, because if you can master it, then it's not something that you need technical analysis for, but it's something that's able to generate you passive income at pretty much at your phone. So I can make an options trade at my 9 to 5, make me some passive income from not doing any manual labor to get the money, to be able to obtain the money from doing options. And that's just something to add to your knowledge. With the current market downturn, it accelerated the time frame on when I was going to learn options. So, market downturn and boom, I'm in options now. So these options here aren't exactly to make me money, but it's actually to be a safety mechanism. I essentially bought puts. I bought $14 puts in April on, I guess, April 17, 62 contracts. So currently we got 7,700 shares of YieldMax. This is protecting 6,200 shares of YieldMax. This is giving me a bottom line. So if YieldMax drops to below, let's say $14, and it's currently trading at $12 per share, I'm gonna have the ability to sell my shares at $14 per share. So this is why I bought the put options. It's to preserve capital. It's risk mitigation also. We're gonna learn how to make money from options soon, but these aren't to make money, these are to protect money. But yeah, that's something new in my portfolio. I want to bring up the point earlier talking about margin buffer. Even though the buffer is really good, if we go to my YieldMax position, we also got the puts on YieldMax because it's my biggest position. But my point is, it's 55% of my portfolio. It's too much, guys. Realistically, you don't want anything to be half of your portfolio unless you're in something like VOO or SCHD. Other than that, you don't want something being this high of a allocation in your portfolio. But yeah, currently we're working on lowering margin while also lowering the allocation of YieldMax in our portfolio. And real quick, if you guys made it this far into the video, hopefully you guys check out my Discord. I like to talk about this place because it's a very great place, and I feel like you guys would gain something if you guys join. Tomorrow, actually, we got an options class. Well, not exactly a class, but a bunch of us are hopefully going to jump on to Discord at 8 p.m. EST tomorrow on Sunday. We're going to be inside voice call, and I guess Certified Freak is going to be going over his option strategy and, answering questions to beginner options traders. So yeah, it's going to be nice being able to see what he's doing with his portfolio and being able to say, well, that's something I want to do, so I want to learn more from him, or I want to learn more on this strategy. And being able to jump into voice call, hearing his voice, hearing someone talk about it, being able to ask questions live in voice. Yeah, I feel like it's going to be very informational and very beneficial. The other benefit for joining our Discord is, even though it's small with about 100 people, there's a lot of smart people in our Discord that will answer questions if you have questions. People like TWI or Anush, these people are very analytical and very smart and will answer your questions if you have any. And you're investing, so if you have the ability to ask questions but have good takes and good perspectives, being able to bounce ideas off of each other, it's very good to do. They might see something that you don't see, and then you might change your perspective, and you won't be able to do that if you're alone. But if you join our Discord, you're going to have that added, I guess, wealth of information that you can tap into. Our Discord is unbiased also, and what I mean by that is if you join certain communities, they're going to tell you to buy CLM. The other main point about our Discord is that we are very unbiased. We won't tell you to invest into one thing or one asset class only. We're going to tell you to be smart with your money, and if other people told me to be smart with my money and I listened, I would not have had to sell for a loss in some of my funds. For example, some people will tell you to buy only Misty, right? We won't do that, guys. We won't tell you to buy Misty only because it's the highest yield and you'll make your ROI back in 1 year. What we will say is, well, you guys might want to look into Misty, but do understand it's in the crypto space. So if you don't believe in crypto, don't buy Misty. It's as simple as that. You got a low risk tolerance? Well, maybe you want to look into SPY or QQQI. There's NAV appreciation in those funds. If you don't like NAV erosion, if you don't want to see that chart go down, look into SPY and QQQI because those charts over time they go up in value. If you want weekly paying 15% plus ETFs, then you might want to look into XDTE because that stock pays weekly and also it pays a 17% distribution. So this is what I say when I mean we are unbiased. We will tell you guys the pros and the cons of things, and we won't tell you just to look at it from one perspective. We will give you multiple perspectives. Link is in the description, guys, and also the comment section. Going over to our spreadsheet, I love my spreadsheet because everything is at one place and it's really easy to look at. You got the ticker, share count, NAV, the average yield. Earlier I said 17%. Well, as you can see, XDTE 17%, SPY 12%. It's easy to see everything at one place. The average payout for AIPI is $1.40 per share per month. How much I paid for my position, how much it's currently worth, the NAV return. So I'm down $16,000 on YieldMax. It's nice to have this chart on your portfolio because you guys know the saying, if you don't find out how to make money when you're sleeping, then you are going to die working at your 9 to 5. So it's nice to know that currently I am making $12 per hour from my investment portfolio on a 24-hour cycle. So yeah, every hour I am making $12 per hour. That's nice to know. Right now, boom, $12 per hour from working. I got my position allocation. You can see, so the green is considered safe, right? The yellow is YieldMax, the orange is Kurv, and then the red is cryptocurrency. We're gonna try to invest a lot more into the green stuff. SCHD, I don't want to grow the position. I just want to get it to a nice rounded $25 shares because it looks nice. So that's why I'm buying SCHD. JEPI and JEPQ are lower yield, so I don't want to buy those mainly, but this is what I consider a safer yielder in my portfolio. The purple is something I'm actively buying right now. I actively am buying QQQI, SPY, T-SPY, XPay, and XDTE. Those are indexed and those are safer and they got a lower beta. If the stock market drops 5%, then XDTE, XPay, T-SPY, they're probably going to drop only 5% about. If you look at YieldMax, it's probably going to drop 10%. So this is why I'm trying to lower the beta of my portfolio so when the market goes down, it's not dropping like a rock. And yeah, guys, another neat thing about my portfolio is you can see, let's say QQQI got 15 shares, right? But my share goal, I want to buy 25 shares. So let's say I want to buy 100 shares now, right? Boom. You saw this change right here. So it's saying I need to buy another 85 shares. It's going to cost $4,000, but also it's going to bump up my, income by $51. So I just like how everything is not exactly automated, but majority of it is. And it's very nice to see everything in one place. But yeah, guys, if you made it this far, then thanks for watching. And again, hopefully you guys join my Discord, link in the description. And we are going to make a margin safety video soon. Thanks for watching.